Morning everybody, doing Shepherd here again, DRFX Forex Swing Trading. Taking a quick look at the setup on the US dollar Japanese yen this morning. Here we can see that the pair has been in a very strong uptrend since 2012. More recently in 2014, we see that the pair started to move sideways and eventually formed this large consolidation range setup, which has now been broken bullish with a breakout above the resistance area. Now, taking a closer look at the situation, we can see that there's an interesting scenario developing on this pair. First of all, we saw this breakout actually took place, coincided with the breakout from this range setup within that larger consolidation boundary. However, one of the things that we need to take into consideration is the fact that the breakout equivalent of this range has now been hit. And as you know from the theory of consolidation breakouts, whenever the breakout equivalent of any consolidation is hit, the market usually slows down to eventually move sideways or pull back before continuing the breakout. So given the significance, given the size of this range of this consolidation setup that has been broken, it is very likely that this is going to be the situation that we see take place with this pair. So based on the speed of this market, we're likely to have two types of pullbacks and setups that could take place at this area here before the breakout continues bullish. We could see the market form a range setup, consolidation setup, that is then broken bullish, or we could see a counter trend line pullback that then leads to a bullish U-turn to continue the movement long in favor of the US dollar. So here we can see signs of this slowdown of the market with these bullish candles that have now become weaker with these wicks that have been formed. So this is an early indication that the trend is, this is usually an indication that the breakout from consolidation is slowing down. And given the fact that it has coincided with this area here, it is not surprising that this will eventually lead to a pullback that produces either of these types of setups that can be traded when the market then produces another U-turn bullish. So this is something to look forward to over the next couple of days, and let's wait for this to unfold, and hopefully there'll be some trading opportunities for us. And based on the speed, again, based on the speed and the size of the pennant that is being broken, it would not be very hard for us to capture at least between 100 to 200 pips within a few days of the next breakout signal. Now, switching to the situation taking place on the Euro Canadian dollar. Here we can see that the market has been in a very strong downtrend since 2014. Here we see that a range setup had been formed and was broken to continue the bearish movement in favor of the Canadian dollar. However, we can see that there's now been a pullback that has carried the market above this inner downtrend line. Now, given the size of this range setup, one would expect that this breakout would continue for a longer time period than has taken place. Given the size of this range, one would expect the breakout to probably at least carry us down to this area here. So what this means is that this pullback that has taken place could be temporary, and we could actually see a bearish signal produced within the next couple of days that indicates a continuation of this downtrend. Here we see that the setup on at this area here has actually taken the form of a range, which drawing this uptrend line here is actually taking place above this, what is actually a counter trend line. And here we can see that there's an inner trend line as well. So what we would need from this pair is a bearish signal below this area here, below the support boundary, as well as the outer uptrend line or the counter trend line. A strong bearish signal at this area here to indicate the continuation of this downtrend. However, one of the things, another possibility that could unfold is that we could actually be in the early stages of a bullish change in the trend. Here we can see that this pullback has actually taken the form of what looks to be a head and shoulders or bull crown formation, with the left tip at this area here, the center tip or head at this area, and the right tip or the right shoulder above the broken inner downtrend line. So there are two things that are supporting this scenario. One is the fact that, as I said before, one would have expected that if this bearish movement was going to continue from this range, it would actually take us to this area here. So this breakout is actually shorter than expected, and the pause that is taking place is actually much longer than one would expect for consolidation breakouts, which are usually very fast. These movements tend to be very fast. Then the breakouts from these setups tend to be very fast and sharp, with very little pause taking place along the way. You generally see something like this with respect to breakouts. A pause such as this, followed by a U-turn to continue the movement in the direction of the breakout. However, this second pullback is unexpected and unusual with respect to consolidation breakouts. So for those reasons in particular, and the fact that we're now seeing a very clear bullish setup now, bullish crown now taking place, leaves us to indicate that we are actually going to be seeing a breakout bullish that takes us at least to this outer downtrend line, and then breaks before breaking above the outer downtrend line to start an uptrend in favor of the euro. So given the bearish, so we have a bearish and a bullish scenario that are possible right now on this pair. But given the fact that this pullback and movement sideways is longer than expected, given the fact that we're breaking off from consolidation, and given the size of this consolidation, it is very likely that this will actually lead to a bullish movement that would complete the bear crown setup that is now taking shape here. So with the next couple of days, my prediction is that you're going to see a bullish signal at this area here that is going to lead to a breakout above this outer downtrend line to head higher for the euro, in favor of the euro, for most of the month of June. So this is this setup, I believe, is going to be the key to the movement of this pair for the month of June. And based on what is taking place here, we're likely to see this take place in favor of the euro dollar. So let's wait for that bullish signal over the next couple of days and trade accordingly. So until then, take care.